CPI, PPI, we got more earnings like Disney, debt ceiling meeting. Janet Yellen's on later today. She's already said if they don't raise the debt ceiling, quote, we'll have an economic and financial catastrophe. Austin Goolsbee today is getting vibes. Those are his words, that a credit squeeze is beginning. And yet, I don't know, we're kind of hanging in. What do you think?
Yep. Well, I think there's a lot of vibes out there that haven't proven to be anything in the data yet, but it's a huge week for inflation. Remember, CPI is what the consumer pays. PPI is what businesses are paying. So we're going to get a read on both. If we see CPI stay flat this month, I think that's probably not a great sign. PPI may come in a little bit weaker, but that's, to me, an indication that businesses are assuming activity is going to be slower going forward. So again, not a great sign. I've waited for a while for weeks like this to come about and to actually move the market in one way or another. I don't know that we're going to get a week like that yet. I think that, yes, we have some earnings still left over. I don't know that they're going to be that influential on the direction of the market. We've gotten the bulk of earnings season, and largely the narrative has been not as bad as we expected, so we're still afloat. We've stayed buoyed by that. But I do expect that this credit crunch and the contraction in availability of funds is going to really start eating into small and mid-sized businesses, and we're going to hear about that soon enough.
All right, so Joe, we got the debt ceiling issue. We got a central banker talking about a credit squeeze beginning, and the VIX is at 17. And I'm wondering what you think of after last week, which was a big week, as we head in now with sort of everything on the table. Market's too complacent or not? Where do you think we're going?
I think the market is incredibly resilient. I told you last week I thought there was a change in trend when we failed up at 41.86. Next thing we know, we're trading at 40.48. Last Wednesday, here we are back to 41.50. That's a very resilient market. Now, a lot of that was Apple's earnings acting as a catalyst, mega caps continuing to be strong in the marketplace, but you can't dismiss the premise of the resiliency. But overall, we are clearly in a consolidation range. We're waiting for a lot of information, which Liz has, pointed out. I think when you look at inflation this week, you have to understand it's going to be distorted because the price of gasoline was up 3% in April on the back of the OPEC supply announcements, and that's been reversed here in the month of May. So I agree with you. I'm not necessarily sure you get an indication on overall where the market's going to go. I still think what you're trying to do here is you're trying to mine for opportunities going bottoms up within the market and see if you could capture some alpha in that regard.
You've already sort of looked for your opportunities in the rebalance of the Joe T in terms of adding, more growth, mega cap tech, et cetera, reducing some cyclical exposure. All right, Weiss, Barry Bannister, Stifel, I referenced one strategist at the top here raises the target. He goes to 4,400 from 4,200. He talks about the resiliency in not necessarily the market per se, but in the economy. We also forecast inflation, he says, to slow sharply. Mike Wilson sort of counters that. Many of the leading macro data points have fallen more recently and are not pointing to a similar run rate in terms of EPS strength looking forward through year end. So Bannister grows more optimistic. Wilson stays, cautious as he's been. What about you? We've been undeniably resilient, I think, right? From not only an economic standpoint, but I think even you would admit, the market's kind of hung in the face of a lot.
The market wants to go higher. To me, this is, I'm sure one of Liz's favorite shows when she was growing up was Hogan's Heroes. They had a character, Sergeant Schultz. So this is a Sergeant Schultz market. I see nothing, I hear nothing. Let's just be happy and go along. And that's what's going on. So the market has this resiliency, not across the market. You take a look at Boeing, for example, trading below 200 again. It got up to 225 or so. So it's really pick your spot. Friday I found bizarre because you had inflation picking up in terms of wage inflation, and that's 2 days after Powell said, hey, I'm not just looking at wage inflation, but that moved up. You had the bond market yields really rocketed up, yet Apple controlled. So you're sort of picking what you want to look at, and what people are looking at are tech earnings to justify the market. Could that be the right thing? Could be. Now, the way I'm dealing with it is normally in this kind of environment, I'd be short some things, but this is not a market where you can be short because you get your face ripped off. So I choose to have lower exposure. Austin Goolsbee, I agree with him. And I think the issue with commercial banks, the regional banks in particular, that they haven't seen this massive walkway like we saw with Blackstone and others is because leases just haven't come due yet for renewal. So you're not going to walk away from a lease right now because you're going to get sued, and guess what? You're going to have to pay. So as you see that go through the system, as you see credit tightening, and he's right, it is tightening, that's going to impact the small businesses, which is why we're seeing the Russell not do as well as top line tech.